Frank, you're a busy man. Thank you so much for sitting down with us. How are you doing?
Thank you. Good.
Good.
That was a good start of the conference yesterday.
Yeah. And a busy day for you today. You did the keynote address.
Yeah.
How did that go?
Well, that's the first time I had the opportunity to talk about energy transition. So kind of a new topic for me. I was mentioning during the presentation this morning that usually I would be talking about M&A, about financing and so on. But this year, when I thought about the topic I would like to talk about, that was really energy transition. And I was mentioning that we've seen this topic getting more and more important for the companies and the banks in the last 3-4 years. But clearly, the last 12 months, we've seen a kind of an acceleration of the process, with a lot of companies talking about their diversification, about new strategies in terms of renewables and so on. So that's a very important topic, I think, for the industry.
And I think that what I've been kind of picking up on is that the pressure and the interest generation is coming from the companies, but it's also coming from investors. I think it's
coming from the market.
Yeah,
definitely.
So tell us a little bit about that. You've been having a lot of conversations today. Is that being brought through with the conversations that you're having on the floor and the meetings in the meeting pods?
It is, because that will have an impact on the companies in the coming 12, 24 months. Again, I was mentioning this morning that it has already an impact on the capital markets, where we see that companies are now struggling to raise money on the equity capital markets. The reason being that investors are looking at ESG as one of the key investment criteria today, and that was not the case like 2 or 3 years ago. So that has an impact on public companies today. It also has an impact, and it will have in the coming years an impact on the capacity of private equity-owned companies to consider their exit options. Because usually when you had these portfolio companies backed by the usual suspects, the Carlyle, the Warburg or the Blackstone, one of their key options for exit was getting public. Today, is that really an option? In the current market, I doubt. What's going to happen in the coming 3-4 years, who knows? But right now, this is clearly something where all the companies are struggling.
So the dynamics of the energy banking is definitely changing. What should companies be thinking about going forward?
Well, it's changing, but at the same time, we will continue to see good deals happening. Well, look at what happened in 2019. We have seen a lot of private equity-backed companies buying assets in the UK North Sea, with the majors divesting, like Conoco, and now you have potentially Exxon coming on the market and others. So there's been a lot of private equity companies, private equity-backed companies like Chrysler, who have made big acquisitions in the UK North Sea. So they managed to raise money, but the money was coming particularly from banks. So there's been no change on that front. And also, of course, from equity raised on the private equity front. What's going to happen in 2020? There is a move from the majors to concentrate their efforts on the big projects. So they are looking at assets that are maybe at a late stage in their lives, or mature assets where they say, we want to divest these assets and concentrate on the big acquisitions or the big projects. A good example is Exxon. They have announced recently a divestment program of $15 billion of divestments in the coming 2 years. Total has done it for a smaller amount, but still $5 billion that they're going to divest. So that would be opportunities for smaller companies and private equity-backed companies particularly. At the same time, the majors, what they are doing is they are looking at the big projects. Total is a good example. They've done this deal with Oxy and Anadarko to get into Mozambique with LNG. So they don't need our money to do that, or they need it at the corporate level. But smaller companies will need money from banks to buy new assets, particularly in Africa and in the UK North Sea.
So we're talking about the big projects here, but are there any up-and-coming oil and gas regions that do excite you for 2020?
UK North Sea is still very active, because again, we still have this move of the majors trying to divest, because these are major assets, but new companies coming and buying these portfolios. So that will be an active part of the world for us. Africa, Nigeria, as always, very active. Angola coming on stream as well with some opportunities. And obviously there will be on the east coast the Mozambique projects, the very big Mozambique projects with Exxon, Eni and Total. So Africa is still very key. UK North Sea. Brazil may be an opportunity for us in the coming months, in the coming 12 months particularly, with new assets where not only the majors but also smaller companies could be interested in and could participate to the development.
Lots happening.
Yeah, quite active everywhere.
Yeah, and I would say even in, and I don't think it's an uncertain climate. It's just a climate of heavy change.
It is.
And so, where does Natixis stand in all of that?
Well, it's an interesting question. Well, I don't know if you remember with that discussion some 12 months ago,
yes,
talking about the investment that Natixis is doing in energy and natural resources. So that's a key sector for the bank, because this is a sector where the bank has been active for more than 30 years, lots of clients on a global basis. So we will continue to invest in this sector. At the same time, we are not ring-fenced in our business and not looking at what happens in the world. And the bank is also looking at energy transition, the climate change impact, and what we have to do to continue to act properly in our environment. So what the bank has done recently, and I was talking about it earlier today, the bank has introduced recently what we call the green weighting factor, which is a mechanism whereby the bank will allocate a weighting to the assets we have in our balance sheet. That will be easier, or that will have a better weighting when it's a green asset, and we'll have a more difficult weighting if it's a brown asset. And again, as I was mentioning earlier, the purpose is not to penalize our clients who are in the oil and gas industry, but it's more to incentivize everyone to participate to what number of companies and number of banks are doing these days, which is let's move to something that is greener for everyone, for the society globally, and let's find the right tools to develop oil and gas companies in a proper way in the coming 10 years. This is not just cosmetic, it's real. When we look at the investments, CapEx investments that are required on a global basis to meet the energy requirements of the globe, we still need oil and gas. So the question is not whether we can live without oil and gas, we still need oil and gas. The question is how do we make sure that oil and gas will be better organized to make greenhouse emissions reduction, to make sure that we are more carbon neutral, etc. So that's the target, and that's what the bank is willing to participate in.
Fantastic. I mean, every year it seems that the conversations become a little bit more in depth and the action becomes a little bit more palpable. Yep. And we're seeing a lot of these incentivized programs. Again, WECA seems to be like a really great place to air those ideas, to come together, to collaborate, to show what you're doing, and perhaps push the people that aren't acting as speedily.
Yeah, well, that's the plan. That's the plan. There are some that we will have to push. There are some that we don't need to push, and that are actually showing the way. Like Energian did yesterday during the conference. Mathieu Trigas made the announcement that he was committing his company to become a net zero emission producer by 2050. So that's a kind of a very strong statement for an oil and gas company. Also, happy to bank them. They're a good client.
Now, you've been very busy and hard to track down today. So again, thank you very much for sitting down with us.
Thank you.
Tell us a little bit about some of the conversations that you've been having on the floor. You often speak about how these events are a great way to feel out the temperature of the industry.
Still the case. You feel the atmosphere. Remember last year when we had the same discussion. I was saying that it was about M&A, what is going on in UK North Sea and so on. You can feel that today it's about energy transition and how oil and gas companies are going to face this in the coming months, because it's not something they can avoid, not something they can ignore. They have to deal with it. And this is always here at the WECA a good opportunity to have everyone talking about the same, exchanging ideas with the banks, with the oil and gas companies, and look for the future.
Absolutely, very exciting. Thank you for your time.
Thank you. Thank you.
Good
It was
to see
great.
you, Frank.
Thank you.